This program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
And our stock of the day is Rio Tinto, the miner producing 79.5 million tonnes of iron ore in the second quarter of 24, a 2% increase from the first. Iron ore shipments 3% higher during the same period. However, production in the first half of 24 slipped 2% from the previous corresponding period. Rio maintaining its current 2024 iron ore guidance between 323 and 338 million tonnes. Now, additionally, Rio has received approval from Guinean and Chinese authorities to invest in its seminal high-grade iron ore project in Guinea, and is expected to put in $9.2 billion into the project and surrounding infrastructure. What does that all mean for the way ahead for Rio, Rudi, and bearing in mind, of course, iron ore prices?
That's a lot of money.
It is a lot of money, but also let's talk about China, of course, the biggest customer, and that data dump we had yesterday, pretty negative. Still
struggling. I think there's a few obvious conclusions to draw. And we just spoke about the reporting season. The reporting season is not necessarily about what companies achieve. It's about what companies achieve in correlation to what the expectations are. That's why the share price today is down 2.5%. They obviously missed expectations. I haven't looked into detail. I saw a few early responses this morning. They missed on some production volumes here and there. But needless to say, ultimately it's about the price they get for their products. Because one conclusion to draw is companies of the size of Rio, BHP, maybe South32 and Fortescue as well, when they miss, they tend not to go down by 10-15%. That happens if you're a small cap in that sector. So there was a difference in the risk profile. What I pick up recently is that a lot of investors who are basically putting together portfolios, they are adding, or they're still adding, mining stocks for the potential disappointment on inflation. And that still is a risk. So that could be one reason why you have something like Rio Tinto in your portfolio and not something smaller. Because yes, we are getting a little bit confident that inflation has been put back in the bottle, but we might, maybe when we have a change in presidency in the US, we might get inflation back on the agenda. So there was a risk there. The other obvious statement to make is I don't think there's anyone on this planet who doubts that the price of copper will be higher in years to come. This is one of the copper players. Not pure, but still one of the exposures you can get. There's still a high dividend there. Share price is not excessively high if commodity prices stay up or go higher. And the question with iron ore, well, everyone who has made forecasts of the past year has been wrong. They've been higher for longer. And you know what's going to happen? At some stage it's going to fall out of bed and nobody saw it coming. That's just, but maybe there's, at this point in time, I would add one thing. You probably prefer Rio Tinto now. It has a little bit less problems than BHP. BHP has Samanco and a few other things. I don't invest in commodity stocks, so I don't have natural inflation protection other side than gold. And I do own gold, but I don't own Rio. But I do think if you're looking for inflation protection, exposure to the copper boom that is coming around the corner, this could be in your portfolio. Why not?
So buy it.
Yeah.
Why not?
Yeah. if you don't own it already.
Yeah. Okay. Phil.
I agree. I think it's a buy. I know. The quarterly was a slight miss, 2%, a rounding error. Solid exposure to iron ore, solid exposure to copper. I agree. Copper, $10,000 a tonne, probably not falling anytime soon. Iron ore's been fascinating. Analysts have been calling it below $100 a tonne for over a year now. It's around $110 today. China has really slowed, but the iron ore price is still pretty solid. So what happens if and when China rebounds in a year or two? Maybe India comes off and maybe it doesn't. Do we get an even stronger iron ore price? So me, I keep it simplistic. If we put in spot prices for the foreseeable future, stock's probably cheaper than implied by consensus. Consensus has a total shareholder return of about 20% before today, inclusive of a 5.5% dividend yield. You don't buy resource stocks for a dividend. This one pays a good one, so you're getting paid 5.5% to own it, 15% capital gain potential. With, as a generalist, I'd say we're going to get some upgrades over 2 years as people capitulate on the iron ore price not capitulating. So Rio probably looks cheaper than it actually is. So small pullback
That's
today.
a double negative. It's positive.
It's a positive, yeah. So I'd call it a buy on today's pullback. I'd be buying on a 2-year view on the basis that iron ore will probably stay flat.
Yeah.
Can't predict it, but it's outperformed consensus forecast for the last 12 months. So call it flat, copper to continue to rise. I think the earnings go up and I'd call it a buy.
There you go. A double buy. For our
One thing to point out, while
Yes.
the market is very confident here that we will see lower bond yields, lower interest rates, lower inflation, and no recession,
yeah.
that last is still up in the air. I mean, you don't be surprised if at some point we will get a recession, technical or otherwise, because interest rates are probably too high here at this point, and they're still where they are.
Yeah.
And by the time that the Fed cuts, let's assume they don't go in July, they go in September, we might get much better, or we might get much worse economic data.
Lots to bear in mind. Nonetheless, that is a double buy for our stock of the day, which is Rio Tinto.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads. All on an award-winning platform. IG, where traders are made.